What is going on out there, peeps? All right. So, in having a conversation, I was trying to explain to somebody what it means to revalue and how it works, whether it's currency, gold, silver, whatever, how it works. You see, you get these kind of signs, these indicators, things you look for. That's about as good as it gets. You get some signs. You know, historians of revaluating, historians of currencies, historians of gold and silver, they know what to look for, obviously. And so we learn from what they tell us. But what it comes down to, whether it's currency, gold, silver, whatever, you wake up one day and boom, it's already done. That's why it's important now to get ahead of the ball game. My subscribers are way ahead. For those of you buying gold and silver, for as long as I've been talking about it, you're way ahead of the curve. Now, I've showed this video before, but it's been dang near a year. And I have more than twice as many subscribers now. So I'm going to play it again. I'm going to play this video. I want you to listen to it. And then I'm going to play it a second time and we're going to analyze it. And I'm going to show you why it is that if you hold gold and silver, you will be part of the largest transformation of wealth ever in history. Okay? So don't just take my word for it. I'm going to go ahead and show you. Listen to what the experts say. Okay, we're going to get into that. So if you're thinking, oh man, I need to buy gold and silver, then if that's the case, well then go to our friends over at Money Metals Exchange. The link is down below in the description. If you are a first-time buyer in Puerto Rico or the United States, and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you will get a free ½ ounce of silver. Go support our friends over there at Wall Street Silver. The links for their website and YouTube channel will be down below in the description. And make sure you know the difference between when I post something and somebody who's trying to scam you of your money post something. Whenever I post something under my videos, you'll see a gray circle like this around there. And a fake person impersonating me trying to take money from you, they'll have my name but no gray circle. And now that I think they're getting hip that we're talking about it. So now anybody that tells you to go to WhatsApp is a fraud. Okay? So don't go there. You guys know I got Pimpy's Investment Chat, same name as the YouTube channel. In here we do talk about gold, silver, cryptocurrencies, as well as foreign currency investments. I encourage you to come join us. It's free to do so. Over here we do talk about the things that you like, and if you have any questions, come over there and post them and they will help you. So what is going on? Just give me a quick refresher here. And the week ended with gold being about, well, same thing, around the 1900. Well, it's a little bit below there, so 1818. They're poised to run again. And silver, man, being supported at the $28 level. Remember, for like 2-3 weeks, they kept beating it up, just knocking it down. They wouldn't allow it to get there. As a matter of fact, they're kicking it down below 27. And now it continues to go up around the $28 an ounce level. Cryptocurrencies, like, remember when we had that great run with gold and silver? Remember that? Last summer? And then all of a sudden, for a few months, it just went stagnant. Not a whole lot of excitement. Accumulation? Most likely. Cryptocurrencies seem to be in that area. Stagnant. Not a lot going on. Remember, they were running up, running down, running up. They're just kind of running horizontal. This looks like accumulation. If that's the case, you can see. And I still think they're posed for a big run here coming up. I haven't given up on them 100%. Despite what people say, you hate crypto. No, I don't say that. I don't trust them. But I'm excited about a phone call I'm going to make today. And I believe this individual could change my mind about cryptocurrencies. So we'll see. Anyways, I played this video before and it's a must hear. So I'm going to play it all the way through and not say anything. And then I want to play it again. And then let's revalue, or not revalue, let's talk about what he's saying so that there's a better understanding. This is why you want gold and silver. And for those of you who have it, once you watch this, you're going to be extremely excited that you have it. And for those of you trying to convince family members to invest in gold and silver, this would be the video for them to watch. All right, here we go. I'm going to play it through and then we'll loop back around.
So I really think what you're going to see sometime before the end of this decade is a huge deflationary crash, and then countries will print their way right into hyperinflation, because what will happen is they'll print and nothing will happen. And they'll print and nothing will happen. Because as they print, people are still scared and they'll save that currency and they won't spend it. And they keep on printing, and in my book I wrote that, you know, like the US government could do helicopter drops. They could refund all the tax that you've ever paid in your entire lifetime. Eventually there will come a time where people say, you know what, I've got enough saved up for retirement and I really deserve a new car, or I really deserve a new big screen TV. And when people start getting comfortable and that currency comes out into circulation and velocity picks up, you can have a hyperinflation without having to have the countries print their currencies into oblivion. And so how does this affect you, and what can you do about it? This is where the opportunity comes, I believe. I believe in a currency crisis, the people that are, there's going to be a wealth transfer. And for every 1,000 people that don't get prepared, the one person that does get prepared is going to reap rewards at a ratio of 1,000 to 1. There's going to be a wealth loss for the people that aren't prepared, and a wealth gain for the people that are prepared, and that it's just a transfer. There's going to be no currency necessarily changing hands, but what you're going to see is the value of currency plummet and the value of precious metals skyrocket. And that is a wealth transfer. And in the United States, there's nothing better that shows it than this graph. This is base money from 1918. The Federal Reserve doesn't supply data before that, all the way until 2 years ago. With QE3, this is up here now, and with the pullback in gold, this is down here. If you could take these lines back here, back to 1913, before the Federal Reserve, they converge. There was an equivalent amount of base money to gold at the Treasury. They expanded that, which was a lie, and then they had problems in the 30s, and there were bank runs. And they revalued gold in 1934 to 35 bucks an ounce, and the value of the gold at the Treasury once again equaled the value of all the paper currency, the base money in circulation. And then we go through World War II, this big expansion for World War II, and North Korea and Vietnam and Johnson's Great Society in the 60s and the 70s. And gold became free trading August 15th of 71. And the will of the public and the free market bid the value of the gold at the Treasury up until it once again equaled the value of all the currency in circulation. The opportunity is the spread between these two. This was the amount of opportunity. And so back in the year 2000, it was the greatest, it's as great an opportunity as existed here in 1970. But now with this pullback and the expansion of the currency supply that we've seen with QE3, we have the greatest opportunity in history laid at your feet right now. I believe that the stocks are a good thing, but I also believe that everybody should have some real physical gold and silver. I don't give advice. I never tell people what to do. But what I do is I buy gold and silver, physical. And so now, in a Kondratiev winter and in currency crisis, what happens is you wake up one day and the opportunity is gone. This is the Russian ruble from 1919 up until today, and there's these enormous revaluations. This is during the Russian Revolution, the revaluations of the currency. But look at the number of revaluations that they've had, and when you see the scale of these revaluations, it's just absolutely mind-boggling how much purchasing power the Russian government kept on stealing from their population. But what happens in a currency crisis, does anybody here, have they heard of long-term capital management? Okay, this was a hedge fund that blew up back in the late 90s, and it just about caused the entire world financial to melt down. We came within hours of everything freezing up, and no credit cards working, not being able to get anything out of your bank account, everything being shut down. What happened was Alan Greenspan got a bunch of very smart people and the world's big banks all together to bail out this hedge fund, and everybody found out about it after the deal was put together. When Lehman Brothers melted down, did you find out about it before it happened, or did you find out about it after the Federal Reserve and the Secretary of the Treasury and everybody got together and came up with a solution, and it was already dissolved, and other banks had Bear Stearns and Lehman Brothers? I mean, what happens is there's an emergency, and a very few people keep it secret, and they try and solve the problem, and then you wake up in the morning, problem solved. Well, what happens in a currency revaluation is there's an emergency going on behind the scenes. The public doesn't know about it. A few people get together in a room and they decide that the solution of the problem is to make gold, for instance, in this thing, the coming currency crisis. You might see gold go from where it is to, say, $8,000 an ounce, or $7,000, as Jim Rickards believes, or maybe $15,000 an ounce, like I think might happen. That's what it requires for that base money to cover the currency supply again, is about 15 grand an ounce or higher. And so the revaluations can be blindingly quick, and they can add up to some mind-boggling figures. This is the Russian revaluations. If you went back to Peter the Great, when he established the gold Russian ruble, and then the revaluations that happened during the Russian Revolution, 10,000 to 1, 100 to 1. In other words, your old currency is no longer useful. You have to bring it into the government and exchange 100 Canadian dollars or American dollars or whatever for one of the new currency that the government is coming out with. And then 50,000 to 1. That's 3 revaluations in this short period during the Russian Revolution. Then 10 to 1, then 10 to 1, and then 1,000 to 1. And when you add all of these together, 1922, 23, 24, 47, 61, and 1998, this went along with the long-term capital management problem. This happened 1 year after the long-term capital management problem, and long-term capital management contributed to the Russian default that caused this currency crisis, where the Russians, they ended up with 0.1% of their purchasing power after this currency conversion. 1,000, you bring in 1,000 of your current Russian rubles that you thought were worth something when you went to bed that night. You get up the next morning, you got to bring them into the bank, and you get to trade those 1,000 for one of the new ones. And what that adds up to is the Russian ruble was devalued 5 quadrillion times over that time frame. This is the amount of theft that governments can perpetrate on their populations. So the opportunity sometimes comes in a bull market that progresses and then peaks, and then you go into a bear market. That's in a Kondratiev summer. In a Kondratiev winter, many times it's a currency crisis that requires an overnight, lightning-fast revaluation, and the opportunity does not exist after that. I believe, though, that what will happen is you're going to see people, if gold did get revalued suddenly to $15,000 an ounce, the opportunity is gone there, but where is silver? So I think right after a revaluation, you would see people flooding into silver.
Okay, good. Now we're going to go through and just, I hope you caught everything he said, but let's go through and walk through what he's saying to help break things down.
So I really think what you're going to see sometime before the end of this decade is a huge deflationary crash, and then countries will print their way right into hyperinflation, because
So we're already there. It's this part right here. So he's telling you what signs to look for. Deflation, it's already happened. Print money into hyperinflation, that's where we are now. The quantitative easing that started, back in 2009? it still goes on now. This is our third administration where the quantitative easing is coming in. They're printing money like crazy. So here's what he's saying they hope happens.
What will happen is they'll print and nothing will happen. And they'll print and nothing will happen. Because as they print, people are still scared and they'll save that currency and they won't spend it. And they keep on printing. And in my book, I wrote that, you know, like the U.S. government could do helicopter drops. They could refund all the tax that you've ever paid in your entire lifetime. Eventually, there will come a time where people say, you know what, I've got enough saved up for retirement and I really deserve a new car.
I have enough saved up in my retirement. I deserve a new car. So what happens is the deflationary starts. Then all of a sudden, they start printing money like crazy, which we already see happening. This past year, is that what this is? This year, they've already printed 40% of all the total amount of our debt this year alone. So that's hyperinflation. We're definitely heading there. Look at inflation, how it's taken off already. They're telling us, oh, it's 4% last month, 5% this month. I mean, yeah, hyperinflation is here. So listen to the warning signs he's telling you, because what happens? So we keep getting stimulus checks, stimulus checks, stimulus checks. Well, without people working, it's going to be really hard for those people to start going, well, hey, I want to go buy a new car or a new TV. They got to put people back into work. Eventually what happens is people start saving up their money because they're too afraid to spend it. The government starts finding ways to force you to spend it. Oh, they could force you and you won't even know it. Negative interest rates. So if you have your money saved up for any reason, retirement or just because or rainy day, negative interest rate means you're paying the bank to hold your money. So you're actually losing money just for your money to sit there. That's negative interest rate. Or they can start cutting off stimulus, unemployment, not 100%, but you know you can run out of your, they can stop printing stimulus, you can run out of your benefits, and then you're forced to tap into your savings. Or if that doesn't work, they could just do a bail-in. I hope you guys, I did find a video. I told you guys there's one called A Lesson from Cyprus. So I'm getting ready to load it up on the other website so you guys will have access to it, but it is in my playlist. Go look for it and see what happens in a bail-in. They did it to an entire country. So one way or another, they're going to take your money from you. If it's in the system, they will take it. If it's in the banking account, they will take it. That's why I'm saying you guys should be prepared. Hopefully you have a way to do this, which is try to take out at least, I say this much just in case. 6 months. I know everybody usually says something around 3 months. I say 6 months to be on the safe side. What does it hurt? Add up what all your normal bills are monthly with the averages. Multiply times 6 months. Add on additional, 10% for miscellaneous stuff you didn't think about or is something that pops up along the way. And have that cash sitting in your safe out of the bank. Because when a bail-in happens, they take all your money in the bank. And that includes retirement funds, savings, everything. Don't be one of those people going, nah, Pimpy, that's not going to happen. Oh, you need to look up bail-in, not a bailout. You see, taxpayers paid a bailout to save all those banks. We did it through taxes. They just took our tax money. A bail-in is when they don't do it through taxes. They literally just come into your bank and take your money. And I can't tell you how naive people are. There's so many people out there go, no, that's not going to happen. You're wrong, Sparky. It's already happening. It's happened. Cyprus was the first country. They were the first test run. It's happened to a couple other ones since then. So they will take your money one way or another. So you want money outside of the system. Whether you take your cash, because the cash will still be good. It'll just be taking it from you. So that's why it should be in your safe. Or you have it in gold and silver. Now, here's my concern about cryptocurrencies. People are going, that's a safe haven. Not if it's being regulated. If they do a bail-in, you don't think they're going to force these cryptocurrency platforms to turn over whatever funds are there? Remember, this take the money out of your account. It's not actual physical money. Take the digital version. And if you think cryptocurrencies are exempt from that, you're sadly mistaken. Okay? So a bail-in takes all your money. I always get people go, yeah, Pimpy, but you know what? They could do like they did last time and outlaw gold and silver and do confiscation. Once again, I'm going to clarify that. When they did confiscation, they didn't go door to door and take it. People voluntarily gave up their precious metals. Not everybody, obviously. We were told we were doing it for the benefit of the country. So not everybody took it, and they didn't go to door confiscating it. They outlawed gold and silver. Or I should say gold. So they don't have enough resources to be going door to door saying, hey, do you have gold and silver? Let me have it. You know what I mean? They don't have it, so they can't confiscate it that way. The point being, hide it. Can you hide your cryptos? Sure, you could put them in a nano ledger. That's probably the best thing for you guys to do. So if you want to protect your cryptocurrencies, because your people going, there's somebody out there going, no, they won't take it. Well, protect yourself then, just in case. Don't leave it in a wallet that's online. Don't leave it on a platform. Keep it in a nano ledger. Take it off the internet. Just like we take gold and silver, physical gold and silver off the market, take your cryptos off the market. We stash ours in hiding places, stash yours on a nano ledger or whatever other new devices they have that takes your cryptocurrencies off of the internet. Wait for the dust to clear. When everything looks like it's all right and they're not going to take people's money and everything seems to be getting back into the flow of things, then use your nano ledgers to do what you need to do with your cryptocurrencies. If you don't need them right away, just hold on to those bad boys. So see, it's not just gold and silver people. Crypto people, you should be protecting your cryptos as well. Buy a nano ledger, I think it's like $100. Other people will put down better versions of them, most likely in the comments. So crypto people, help your people out. How do you protect yourself from a bail-in? Because they will do it. Because remember back in the old days, you guys said, oh, we have total privacy. Remember all this, no regulation, no taxes, and now we see it. So if all these things are there and they're being regulated, and now we have Coinbase as an IPO, they're going to do whatever the government tells them. So you could say put them on these different platforms, but these other platforms, they're not here in the United States. So if they screw you and they take your money, then what? What are you going to do? Sue them? Do you know how much it costs to get an international lawyer? Do you know how long it's going to take for you to get your money back? If you do at all? So be smart. Take your cryptocurrencies off of the platform. Especially if you have a lot of them. Don't keep them there. I know it might seem like a pain in the butt to keep plugging in your nano ledger, signing on, doing what you need to do. But in the long run, you're only protecting yourself, okay? So back to gold and silver. We're in that stage now. He's telling you about the signs. Deflationary or deflationary, hyperflation. Deflationary and then now hyperflation. So printing money, helicopter money, we've seen that. We've been getting that now. And they just keep printing money over and over. And they're giving us, why is it called stimulus checks? It's to help stimulate the economy, which is ridiculous if you think about this. They're just putting us more and more in debt. And by the way, that stimulus money that you're getting, we don't have it. We're having to borrow money. And guess who we're borrowing money from? China. Go figure. let's continue.
Or I really deserve a new big screen TV. And when people start getting comfortable and that currency comes out into circulation and velocity picks up, you can have a hyperinflation without having to have the countries print their currencies into oblivion.
Well, we're printing
and so how does this
currency in
affect
oblivion.
you, and what can you do about it? This is where the opportunity comes, I believe.
Okay, just real quick what this chart is. This is the monetary base versus the price U.S. Treasury gold. So gold versus the money. This line here is money. Our debt. Here is the value of gold and silver. I mean gold, just gold. See this gap? Well, at one time it was like this. This guy tells you that over here prior to this, it was like this. So what happens is it starts to get a gap. They revalue gold to bring it up to support and give liquidity to the currency. And here the gold went up and above, which is good. Then all of a sudden they cross again, and you can see the value of gold either maintains or slightly drops, but they just keep printing money. And then what happens is you can see a slight revaluation, then a revaluation again. So the biggest gains are when these dips are the biggest. So here you got a nice little gain, not big, but a nice little one. I think this is in, so this is when the confiscation happened, 1933. You can see right here. The government made everybody turn in their gold. They gave them $20 per ounce. And once the government felt like they had all the gold, it went ahead and revalued gold to $35 an ounce. That is 75%. Is that right? Yeah, 75% increase in value. That's 175%. Let me rephrase that. 175% increase. So that's what this is right here. Then over here, you start seeing the value of gold drop down. This is because of, I believe we still had the gold standard. So people were coming in and exchanging the currency for gold. Countries figured this out. Of course, we came off the gold standard right here. But look at the gap between the money, the base, and the value of gold. So what ended up happening? Well, we got a revaluation and then a revaluation. So you see, they're trying to keep the value of gold as close to the monetary base as possible. So here is your opportunity to buy and make money. Here was the opportunity to buy right here, probably most likely between 66 and 1970. Man, if you stored up on gold like a big dog, you were a happy camper. I think this is the time right here when gold was, let me see if I remember, I think it was like $200 an ounce right around here. No. It was $50 an ounce. Then all of a sudden it went up to $250. Dropped down to $200. And then jumped all the way up to $550. And this happened quickly. Just quick, a few couple of increments. Within a couple of years, I should say. So if you're holding on to, if it went from 50 to 250, what a 500% increase. Is that right? Yeah. 50 time increase. Is it? Yeah, 5 times 50. So okay, so anyway, sorry. The point being, if you're lucky to be in this part right here and you're aware of it and you start buying gold, right? And you know ahead of time what the signs are, you could be part of large transformations of wealth. You can wake up one morning and realize that your gold might have went from I'm just making this number up just to simplify things. Let's say you bought a bunch of gold. You bought like, oh, I don't know, 10 ounces at $100 a piece. You wake up the next day, it's like $500 per ounce. And you're like, what the heck? Well, that doesn't sound like much. But all of a sudden, a week later, it's now $1,000 an ounce. If we're being honest, it's like you bought them at $100 an ounce and woke up the next day and now it's $1,000 an ounce. It happens overnight. So these dips right here are where your opportunity is. When the gap right here is this big. Here we are again in the early 2000s. See this gap? We saw gold and silver start to make a run. It didn't catch up. Here's where we started doing the quantitative easing. They're suppressing the value of gold and silver. Central banks are buying it up like crazy. If you're not paying attention to news, central banks around the world are gobbling up gold. Why do you suppose that is? They know a revaluation is coming. It's unavoidable. The banks have so much debt right now. There's no trust in the banks. There's no trust at all. Our GDP is at 130%. Is that right? Or what is that? The debt ratio is 130% to the GDP. 130% of the GDP. That's ridiculous. They need it down around 75%. The only way you're going to do that is to revalue gold. What that does is wipes off a huge chunk of the debt and also allows the banks to be liquid again and somehow establishes credibility with the public again, although I don't trust them at all. But you can see this goes up to 2012. Right now, this gap, this dip I'm talking about now, oh, it is ridiculous. It is off the chart. We are here, and this part here is way up here. So people are talking about, maybe getting up to, this video is from 2014. This guy's talking about gold at $15,000 an ounce when it looked like this. It is way higher right now. People are talking about $50,000 an ounce is not ridiculous. As a matter of fact, that's conservative. So if that happens to gold, the other talk that they're having is they need to reset the ratio of gold to silver, and they're talking 20-1. So for those of you stacking up on silver, oh yeah, this is going to be one hell of a ride. But we're not done. There's other things you got to listen to because it's important about what he's saying.
I believe in a currency crisis, the people that are, there's going to be a wealth transfer. And for every 1,000 people that don't get prepared, the one person that does get prepared is going to reap rewards at a ratio of 1,000 to 1.
That's really, really depressing. What he is saying is, when you watch my videos, I keep telling you guys, buy gold or silver, buy gold or silver, and you go out there and you do it, you're part of the 1%, or the 1 out of 1,000. That's not even 1%. You're part of the 1 out of every 1,000 people are prepared for this. So whenever this event happens, they most likely will lose everything. And everything they lose, most likely you'll gain. So you can keep trying to tell family members, this is important. You should do this. And they're just going to keep blowing you off. Look, you can't save everybody. I know, I've tried. That's why I tell people, look, okay, I understand. You don't have to transfer all your 401k or your IRA or whatever savings you have. You don't have to transfer it all at once. I mean, not all at once. You don't have to do the full amount. But at least be smart enough to move 25, 30% of your holdings into physical gold and silver. Now, for some of you, you're saying that's a lot of money. I understand that. That's the great thing about Money Metals Exchange. They do have a vault. It is segregated. That means you have your own storage. It's kept there for you so that you don't have to feel concerned about holding your metals with you. For the rest of us, I keep mine with me. There's a saying in the industry, if you don't have it, you don't own it. Period. 1 out of every 1,000. So if you are stacking gold and silver right now, congratulations, you are 1 out of every 1,000.
There's going to be a wealth loss for the people that aren't prepared, and a wealth gain for the people that are prepared, and that it's just a transfer. There's going to be no currency necessarily changing hands, but what you're going to see is the value of currency plummet and the value of precious metals skyrocket. And that is a wealth transfer.
Let me repeat that. If you have your investment in any type of fiat currency, what I mean by that, form of fiat, whether you just have your money sitting in the bank, saving it, stocks, bonds, IRAs, 401ks, the currency will devalue. You'll lose its purchasing power. And as your fiat dollar dies and you lose value, then your money really isn't worth anything. But as your money is devaluing, those holding on to precious metals, the value increases.
And in the United States, there's nothing better that shows it than this graph. This is base money from 1918. The Federal Reserve doesn't supply data before that, all the way until 2 years ago. With QE3, this is up here now. And with the pullback in gold, this is down here. If you could take these lines back here, back to 1913, before the Federal Reserve, they converge. There was an...
So converge means, see like this? They're together. And then all of a sudden the gap starts to happen. So we could see patterns happening. Okay? If you learn nothing else about gold and silver, this is the one thing you learn to watch. The monetary base versus price of U.S. Treasury gold. You watch this graph. So it converged over here, and then all of a sudden the gap started to happen. It converged again, and then the gap started to happen. Revaluation, they converge again, and now this gap. But you heard what he said. Where we are now, this is way up here, and this has been brought down to here. So the gap is the biggest gap we've ever seen. So, when we've seen prices of gold and silver jump up here and there and here, we're like, dang, man, from here it went from, $20 to $35. That's a 175% increase is really nice. You know what I mean? And then you see it even go up, way more than that here. And then even more here. And now with the gap as big as it is, it's ridiculous. This will be, in our history, the largest transformation of wealth ever.
Equivalent amount of base money to gold at the Treasury. They expanded that, which was a lie, and then they had problems in the 30s, and there were bank runs. And they revalued gold in 1934.
Right, real quick, a bank run. For those you don't know, for you newbies, this is another reason why I tell you that you should have some money on you somewhere, protected. Nobody has to know your business. There's ways to hide it in your house that nobody knows about if you don't have a safe. So what a bank run is, when people start to panic, they think something's happening. They run to the bank to try to take their money out. Well, a bank only holds so much money. Despite people going, well, there's millions of dollars in it. No, they don't. That's why when you have to take large amounts of money out, you have to set an appointment and order the money. Don't believe me? Call your bank and say, if I had in my banking account $500,000, can I come in today and get cash out, and see what they say? So a billing is just you wake up in the morning and all the money that's in your account was taken out. You lost it. It's gone. You're not even protected by the FDIC. It says it is, but the pool of money in the FDIC is so small compared to trying to bail everybody out. By the time it gets to you, there's nothing left. So you literally lose everything. A bank run is when people panic and they go to the bank and they go to take the money out. And after a while, there's no money there. And the ATMs don't work. You can't get your money from the banking account. And then what happens is, weekend comes and then they restore the ATMs and everything. And then the bank will stay closed and you can get your money out of the ATM machine, but it limits you to only $300 a day. So if you need more than that, you're screwed. Let's say you got a $1,800 a month mortgage. So what do you got to go 6 days in a row to get your money out? You can't take it out all at once. You see what I'm saying? If you're paying cash. I'm just using that as an example.
To $35 an ounce. And the value of the gold at the Treasury once again equaled the value of all the paper currency, the base money in circulation. Right. And then we go through World War II, this big expansion for World War II, and North Korea and Vietnam and Johnson's Great Society in the 60s and the 70s. And gold became free trading August 15th of 71. And the will of the public and the free market bid the value of the gold at the Treasury up until it once again equaled the value of all the currency in circulation.
You see the pattern. The value of the gold equals all the money in circulation. The rumor is the United States has the most gold. They're trying to say that we have 8,100 tons of gold. That's why Senator Mooney wants an audit done. Because it hasn't been audited since the 80s. They might be lying.
The opportunity is the spread between these two. This was the amount of opportunity. And so back in the year 2000, it was the greatest, it's as great an opportunity as existed here in 1970. But now with this pullback and the expansion of the currency supply that we've seen with QE3, we have the greatest opportunity in history laid at your feet right now.
That was in, what is it? This video was posted in 2014? Over 7 years ago? How big do you think that gap is now? This is the biggest opportunity of your life.
Now, I believe that the stocks are a good thing, but I also believe that everybody should have some...
Yeah, stop right here, because I got asked about this last time. Mike is referring to stocks in mining sector, not general equities. So don't go, oh, see, Pimpy, he's saying that the stocks are okay. No, no, no. Miner stocks. When I used to do my stock watch videos, I gave you guys lots of options, and we watched for a better part of, I don't know, 6 months, longer than that, almost 1 year, because I showed you what my 1 year performance was on those stocks. So miner stocks will do good. What I mean by miner is you're mining for gold, silver, precious metals. Precious metals across the board will do good. Somebody asked me about palladium, and I said that, I was concerned about, us going to electric cars and palladium and them would lose their value. What I should have been more clear about is, well, once we get to the other side of whatever this is, this event that's getting ready to happen, all precious metals will benefit. So you're okay holding on to it. But again, I'd stay in gold and silver because that's most likely where your biggest bang for your buck is. So see, Mike is talking about stock, but he's talking about investing in the stocks, gold stocks, miner stock, gold mining, silver mining, those kind.
Physical gold and silver. I don't give advice. I never tell people what to do. But what I do is I buy gold and silver, physical. And so now, in a Kondratiev winter and in currency crisis, what happened?
Okay, so here we go. What Mike's going to show you right now is important for you to pay attention to. Because he's going to show you what's pretty much already happening now. They're devaluing our money. Your money is losing its value. You can tell by the inflation. If you went back, even 2 years ago, what you could buy for $20, you can't buy today. That's devaluing your currency. You're able to buy less with your money than you were a short time ago. So he's going to show you how the government rips you off, but also how we benefit. So watch.
What happens is you wake up one day and the opportunity is gone. This is the Russian ruble from 1919 up until today, and there's these enormous revaluations. This is during the Russian Revolution, the revaluations of the currency. But look at the number of revaluations that they've had, and when you see the scale of these revaluations, it's just absolutely mind-boggling how much purchasing power the Russian government kept on stealing from their population.
Okay, revaluing is when you see the currencies start adding zeros, and you start getting these ridiculous, like the Zim notes. You have a $1 trillion bill, or the Venezuela dollars. At one time we had it too. I don't know if you guys, some of you might be a little too young to know. We used to have $500 bills and $1,000 bills. That's when the currency had lost its value. You're forced to add zeros to it. That's not good money. So this is what he's talking about, the revaluation, but in the wrong direction.
But what happens in a currency crisis, does anybody here, have they heard of long-term capital management? Okay, this was a hedge fund that blew up back in the late 90s, and it just about caused the entire world financial to melt down. We came within hours of everything freezing up, and no credit cards working, not being able to get anything out of your bank account, everything being shut down. What happened was Alan Greenspan got a bunch of very smart people and the world's big banks all together to bail out this hedge fund, and everybody found out about it after the deal was put together. When Lehman Brothers melted down, did you find out about it before it happened, or did you find out about it after the Federal Reserve and the Secretary of the Treasury and everybody got together and came up with a solution, and it was already dissolved, and other banks had Bear Stearns and Lehman Brothers? I mean, what happens is there's an emergency, and a very few people keep it secret, and they try and solve the problem, and then you wake up in the morning, problem solved. Well, what happens in a currency revaluation is there's an emergency going on behind the scenes. The public doesn't know about it. A few people get together in a room and they decide that the solution of the problem is to make gold, for instance, in this thing, the coming currency crisis. You might see gold go from where it is to, say, $8,000 an ounce, or $7,000, as Jim Rickards believes, or maybe $15,000 an ounce, like I think might happen.
They were talking about between $7,000 and $15,000 in 2014, when the gap was as small as it was then. Now we're talking about $50,000 an ounce.
That's what it requires for that base money to cover the currency supply again, is about 15 grand an ounce or higher. And so the revaluations can be blindingly quick, and they can add up to some mind-boggling figures. This is the Russian revaluations. If you went back to Peter the Great, when he established the gold Russian ruble, and then the revaluations that happened during the Russian Revolution, 10,000 to 1, 100 to 1. In other words, your old currency is no longer useful. You have to bring it into the government and exchange 100 Canadian dollars or American dollars or whatever for one of the new currency that the government is coming out with.
So before, what was it? He said it was they had a, what was that, a 10,000 to 1?
And then...
Oh, it was 1,000 to 1. So back then, it was gaining value, the currency was. So remember when he started over here, he's talking about when it first started.
Old currency is no longer useful. You have to bring it into the government and exchange 100 Canadian. And then,
okay, so here it is. So here the currency really doesn't have no value. So you have to, the currencies, so picture this now. Let's think current times. Let's say you have $100,000 and the government says you have to bring them in. We got a new dollar, you have to bring it in. So how this works is every 10,000 of your old dollars, you only get one of the new dollar. So you can see this lost its value. It's no longer any good. The fact that you have to give up 10,000 of your dollars just to get one of the new ones, that's terrible.
The revaluations that happened during the Russian Revolution, 10,000 to 1.
This is better. It's still bad, but still better. Instead of giving up 10,000 for this new time, you only have to give up 100 to 1. It's still better than 10,000 to 1. You see what I'm saying? So whenever they switch to a new currency, you have to bring it in. And in this case, you had to bring in 100 of those dollars just to get one of the new dollars. It's still much, much better, obviously, than losing 10,000 to 1.
100 to 1. In other words, your old currency is no longer useful. You have to bring it into the government and exchange 100 Canadian dollars or American dollars or whatever for one of the new currency that the government is coming out with. And then 50.
Holy smokes. So we went from 10,000 of the old dollars just to get one of the new ones. That sucked. To 100 to 1. Still bad, but not as bad as 10,000. And then it jumps up to 50,000 of your old dollars just to get one of the new dollars.
50,000 to 1. That's 3 revaluations in this short period during the Russian Revolution.
What does that do to gold and silver? I can feel some of you asking it. Nothing. We hold on to it because no matter what this ratio is, because we're not trading it in, we get this every time we sell our gold and silver. See this? We're on this side always. Because when you sell your gold and silver, you will get whatever the new currency is. So you see it, gold always, always, always retains its value. Always, no matter what. So here, look at it, even got better, 10 to 1. That's not bad.
Then 10 to 1. Then 10 to 1. And then 1,000 to 1. And when you add all of these together, 19, 22, 23, 24, 47, 61, and 1998. This went along with the long-term capital management problem. This happened 1 year after the long-term capital management problem, and long-term capital management contributed to the Russian default that caused this currency crisis, where the Russians, they ended up with 0.1% of their purchasing power.
Wow.
After this currency conversion. 1,000, you bring in 1,000 of your current Russian rubles that you thought were worth something when you went to bed that night. You get up the next morning, you got to bring them into the bank, and you get to trade those 1,000 for one of the new ones.
See, that's the great thing about holding on to precious metals. We just write out, let them do all the revaluing, let them change everything, let them do what they need to do. We don't care. Once the dust settles and we're on the other side, and the new dollars maintain, then we sell it for the new dollars. We haven't lost any value to our gold. I said this a million times as an example. Back when gold was $35 an ounce, is that right? $30 an ounce. $30 an ounce. Homes cost $3,500, $3,500. You needed 175 ounces of gold to buy a house. Even up to today, this very day today, if you didn't do anything, you didn't add to or take away from that 175 ounces of gold, you still can buy a house today with that same amount of gold that you could have bought a house back in the 1930s. See what I'm saying? Gold holds its value.
And what that adds up to is the Russian ruble was devalued 5 quadrillion times over that time frame. This is the amount of theft that governments can perpetrate on their populations.
That only happened in a short period of time. I think the chart said from, what was it, 1920 all the way through 1998? Wow.
So the opportunity sometimes comes in a bull market that progresses and then peaks, and then you go into a bear market. That's in a Kondratiev summer. In a Kondratiev winter, many times it's a currency crisis that requires an overnight lightning-fast revaluation.
So again, here, when you're at this point where we are now, we're at the bottom of this cup. We should be buying now. Accumulation, buy, buy, buy. This line right here is off the chart. You can't even see it. This one down here is down here a little bit. It's never been like this. This is going to be the largest transformation of wealth ever. And only 1 out of every 1,000 people are going to benefit. Everybody else is going to lose. You just seen what happens when you keep your currency. It loses its value. New currencies come out. You exchange your old currency for the new currency at a huge loss.
Valuation, and the opportunity does not exist after that. I believe, though, that what will happen is you're going to see people, if gold did get revalued suddenly to $15,000 an ounce, the opportunity is gone there, but where is silver? So I think right after a revaluation, you would see people flooding into
silver. Why? We're already there now. We're already flooding. That's what the silver squeeze is. That's why my subscribers, way ahead of the ball game, keep stacking, people. For those of you who are still procrastinating on switching over at least a portion just to protect yourself of your IRAs or your 401ks, you are going to wake up one day and totally miss the boat. I don't want that to happen. You lose everything by doing nothing. Even if you transfer 25, 30% like I suggested, and nothing happens, you still haven't lost nothing. But if I'm right, you wake up and you lose everything because you didn't protect yourself with precious metals, you're really going to be hating yourself. If you thought you were ready to retire, that is gone. You have to start all over from scratch. So that's it for now, you guys. I just wanted to play this video again. I played it a long, long time ago. This is a great reminder of where we are, what's about to happen. These are things that you can look for that you don't have to be an expert on. Just look for simple little things like that. But you can see the writing is on the wall. There's no doubt about where we are. You can try to help as many people as you want. Talk to family members. Look, they don't want to believe this. They are going to be one of the 1,000 people, or I should say, the 999 people who lose it all. Again, that's it for now, you guys. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. Keep stacking. That's it for now. I'm out.